How's it going? David here. Well, it's Friday. What does that mean? It's Financial Fridays. Yes. If you guys don't know what I'm talking about, when I first started this channel, I used to do every Friday, I would have like a financial story that didn't really have to do with comics. So longtime viewers kind of remember this series. But if you're new to this channel, I haven't done one of these in almost a year, maybe like 7 or 8 months or something was the last time I did a Financial Friday. But I thought I would do one, kind of give an update on what's going on with at least my take on what's going on with the economy, NFTs, real estate, stocks, all that kind of stuff. I'll even throw in some VeVe stuff in there. You know how much I love VeVe. But yeah, so I figured I'd just kind of do an update overall, what my thoughts were, and kind of predict, I guess, a little bit of the future kind of thing for fun. All right, so let's get into the economy. Now, as you guys know, inflation is up 8.2% from the last 12 months. And it's probably, I know that it's kind of like settled down, like it's not growing, right? It's not next month it's going to be 9%, and then the month after it's 10%, stuff like that. So it's kind of dipped down. I think the month previously it was up 8.65, so technically it's down a little bit, but it's still really, really high. I'm sure you guys are very aware of it. Just go anywhere, buy anything, and it's way more expensive than it used to be. And on top of that, I think some corporations are taking advantage of the situation and making it higher. Not just like, oh, we need to raise prices, 8 to 10, 12%, whatever it is now. They're going up like some stuff's like 30, 40, 50% up. So I think there's a little bit of like corporations taking advantage of that as well, of the situation. But yes, it will continue to be pretty bad for a while. The Feds just raised their rates again. They raised it, 0.75%, which basically means it's more expensive now to lend out money. And the reason why they've been raising the rates constantly is because money, like a year or so ago, was super cheap to borrow. And when that happens, a lot of people borrow tons of money and then they start buying tons of stuff. But there's only so much stuff you can buy. So that causes inflation, supply, demand, very easy, simple stuff. So, your credit card should be at a higher rate now, car loans, higher rate, mortgages, definitely a higher rate. So every time the Feds raise the rate, anything where you have to borrow money is going to be raised as well. So that gives me the next point, real estate. How's that happening? What's going on with real estate? Well, the economy not doing too well. I mean, it's not as bad as like '08. The thing with '08 was a lot of people without work. And also another thing is you had real estate that people bought recently and it shot straight way up, right? So if you bought like a year or two ago, you're sitting pretty good. You have equity in your house. But the thing with '08 is people were buying and it crashed and people didn't have any equity. And they had these terrible loans where it's like they kind of got rid of a lot of them. They're like these weird loans where basically you don't pay any interest up front, or it could be something like it's an adjusted interest rate. So it's like, oh yeah, you'll pay 3% for a couple years, and then it'll balloon up to like whatever the going rate is. And the going rate happens to be really high. And so all of a sudden your payments go super high. People can't afford it. They lost their homes. They kind of did away with most of those, although I saw a few people giving out some of those loans. And also the thing with '08 that people don't realize is they would give out loans to anyone. It's like, what, you have a pulse? Okay, here's a loan for a $2 million house. You work at McDonald's? Sure, you can buy this mansion. And that's what they would do. Now it's like way more stringent. You have to show a ton of income. So there are a lot more, not very many people got into homes as they did back then. So to give you an example from my own personal experience, when I got into this house, literally a year ago, I moved in September 11th. Never forget. And I got a 3% interest rate, which was low, but not terribly low. Like my other house is at 2.3%. So anyways, I got in this house a year ago, 3%. If you got a loan for, say you wanted a $500,000 mortgage, like your loan amount was $500,000 from the bank, your loan repayment on 3% over a 30-year fixed would be $2,108. Now that doesn't include taxes and escrow and all that kind of stuff, just the loan amount, interest and principal. Now, if you wanted that same $500,000 house today, so a year later at the current rates, which is, if you have a really good credit score, you're at about 7.5%. If you have like a 650 credit score, like a bad credit score, you're at about 8.25%. So if you wanted that same $500,000 house, it's going to cost you $3,500 to $3,700 a month compared to $2,100. So getting close to double, literally within a year, that same $500,000 that you wanted to borrow. So if you wanted your loan to be $2,100, instead of getting a $500,000 house like you could a year ago at 3%, you're probably going to get, closer to like $300,000 house. That's probably what you're going to be able to afford. So what does that mean? So all those people now can no longer afford homes. So home prices are dropping, and they're dropping fast. It takes a while for, the real estate market to move. For example, my wife's a real estate agent. She was selling a house. They brought it just right as it was coming down. Like if you look back, hindsight's 2020. Look back, you can see the peak of the market. They were like right here. And so they priced it close to it. And now they priced it too high. So a month goes by and it falls more, but they're still too high. So they're like, oh, let's adjust. But then they're adjusting. When something's falling and you're just adjusting right at that point, by the time you put it there, it's already fallen further and further behind. This happens to me in comics all the time. So they ended up starting at 930, and I think they ended up accepting an offer 3 months later for 800. So yes, home prices are going to drop. They're also going to drop more. So if you have a home and you can make the payments, don't worry about it, because in the long run, you'll be fine. Everything, like can't look at the short term. If you look at the short term, you're like, oh my gosh, I need to get out. If you can afford the payments and you're happy with the house, it's going to drop, but eventually it'll go back up. I did a video all about that, how it only took, I think, from the bottom, it took 6 years to reach its all-time highs again from the '08 crash. So, the height was around like 2006, 2007. It took a year and a half for that to drop. And then it took another 6 years for it to go back up to its previous highs, which was an 8-year total from one peak to reaching that peak again. So you're fine. If you are thinking about buying, I would wait. You could probably wait a year. I would wait a year, continue saving money, renting where you are. If you have to move, maybe rent again and rent somewhere, where you can save some money, because you're going to get some pretty good deals, in the next 6 to 12 months. And that's when I would target moving. So let's move on to stocks, how the stock market is doing. Well, obviously, if people don't have money, and inflation's killing everyone because they have to spend it on other things, stock markets are going to take a hit, among other things, reason why. Most stocks are down from their peaks, from their highs, 30 to 70%. To give you some examples, S&P 500 is down 21% from its peak. The Dow Jones is only down 11%, so not that much, but it also doesn't swing high up either. So not that bad. Apple is down 23%. Google is down 40%. Tesla is down 49%. And then Facebook is down 77%. Now, the reason why Facebook is down 77%, because they decided to put all their eggs in one basket, and that would be the Metaverse. Now, most of you people out there, some are super gung-ho about this Metaverse. And I don't know if you guys have seen Facebook's Metaverse. It's trash. It's terrible. It is completely garbage. Literally, just Google it, YouTube it. It is, to give you an example, they spent $36 billion, with a B, $billion on this thing. And it literally looks like, I don't know, what was that, Wii Sports, The Sims from like when I was in high school, like a little bit better than that. Now, obviously, there's some tech and stuff involved that's better than The Sims, but The Sims cost probably like $5 million to make, not $36 billion. And so everyone is just making fun of them. They are a massive laughing stock. People thought this was going to be like, oh, all those people that are into like VeVe and NFTs and all that stuff, they think that, oh, we're all going to live in the metaverse and all this kind of stuff, and it's going to be great. They spent $36 billion. It looks like trash, just utterly garbage. Now, they were They lost $3.7 billion last quarter, but losing money when you're just building something, it's not that big of a deal. Okay, so yeah, they put a bunch of money into it, and obviously they've lost money because they're still building it. Makes sense. But what they have so far, they started in 2019, I believe. So they have like 3 years going on, and it just looks so terrible. What you can do in it is just so worthless. Oh, so bad. Now, they had a target of reaching 500,000 users by the end of the year. 500,000, which I think is too much. I don't know who these 500,000 people are going in this. They just released their numbers. They're at 200,000 users, which is down from 6 months ago, 300,000. So they've lost a third of their users in 6 months. That's not a good sign for a company that's trying to grow and putting billions of dollars into something. That's really, really bad. This is what's going to happen. This is my prediction and what's going to happen. A couple more years will go by, and Zuckerberg will tell the board, like, no, you don't understand. Like, this is going to be the way. But eventually they're going to get sick and tired of them losing money and not getting enough users, where they're going to try to ask him to pivot. Now, I heard something, he has enough shares where he can just basically do whatever he wants. But I imagine the board is just going to get more and more tired of losing money. To give you an example, from its inception, from its IPO, when it first went public, it is only up back in 2012. Facebook, the stock, when it first went public in 2012, it is only currently up like 130% in 10 years. That is terrible. All investors are upset, which is going to cause the price to go more because more people are just going to sell it, and more people are going to be like, I don't believe in Zuckerberg's vision of this metaverse thing, especially when you come out with it and it's terrible and they introduce legs. It's like, oh, wow, that's your big update. You have legs on people. People don't like it. It sucks. Most people don't even visit it. It's something like only 9% of the worlds that they made have ever been visited. So most people aren't. They say they have like 200,000 users. It's probably people sign up, go in it, and go, this sucks, and then never use it. I don't know what their daily active users are. And it's probably a bunch of people just making fun of them. So anyways, I imagine they're going to try to push them out, and Facebook will try to pivot into something else. And this whole metaverse thing that they're building, at least the one they're building, will kind of go away. So that's the metaverse, which goes into NFTs, because people are thinking we're all going to live in this metaverse and we all need NFTs. Now, I've explained many times that NFTs are pretty much the use that you see them as, like where someone makes a picture and calls it a 1 of 1 or 1 of 10 or whatever and sells it to you. That's just trash and garbage. It's never going to go anywhere because there's really nothing put into it, no time or energy into it. They can make these things for next to nothing. Take example, Logan Paul, he was a big NFT advocate. He has an NFT. It went from $623,000, what he paid for it, down to 10. That is a drop of 99.999% or 998%. So massive drop. NFTs are pretty much down by 90% across the board. Just the activeness of people buying and selling continues to drop every single month. It'll probably go to virtually nothing. Like, it'll never ever go to nothing, because I think there's still people trading Beanie Babies and Pogs, which is crazy, but there are Beanie Baby enthusiasts out there, and they still buy and sell Beanie Babies. So I think NFTs will always somewhat exist, but be like Beanie Babies. And that was my first thing I said about NFTs. They're going to be like Beanie Babies. Or I think that I said that about VeVe, but NFTs in general. They'll be like Beanie Babies. Still around, still people buy and sell, but the craze is gone like it was in, when was the Beanie Baby craze? 94? Something like that? I don't know. 97? And that'll be that. And it's kind of going that way anyways. To go into VeVe, which is digital comics, which I've tried to explain to people multiple times. And I'm sure I'll get tons of hate, but I don't really care. This is still my stance on it. They are not like the physical copies at all, these digital copies, for a number of reasons. Number one, they make them and they're all in perfect shape. Comics have a variance of shape, right? You can have a good, you can have a near mint, you can have a 4.0, 5.0, all the way up to a 10.0, which are very, very rare. All comics are in perfect shape. They make these digital copies of old books, like Fantasy 15, Marvel Comics #1, things like that. Marvel Comics #1 came out in the late 30s. was it 39, I believe, came out in the late 30s. It had to survive multiple wars, multiple generations, hands being traded, people actually reading them and throwing them away. They also have to survive. They would take staples out to recycle for the war effort and the paper. So they also had the comic book burnings of, I think it was the 50s, early 50s. They would burn comic books. So yeah, they had to survive all that to get to this point now. And that's why they're so valuable. There's something only like less than 50 copies exist of Marvel Comics #1, but of VeVe, I think they made 30,000 or something, 20,000. And they just made them, they're brand new. So it's not the same. People keep on saying it's the same. It is not. Another example is VeVe also lied and claimed that they had like almost 2 million users. This is a while ago. Someone actually dived into it, and they don't have 2 million. They actually have about 600,000 active users and active wallets, I should say, which means that they have at least one collectible or more. Something like, of the 600,000, like half of those only have one collectible. Then it gets less and less and less. So pretty much half of their active wallets, meaning someone actually has something, has one collectible. They also have another 500,000 wallets, are basically people that signed up and never bought anything at all. That's like me. I signed up for the thing and then deleted the app after I figured out what it was. But I signed up to it. I technically have a wallet on there. I'm sure my thing still exists. I just don't have the app anymore. Or I might do. I just don't know if I delete the app or not. But technically, I'm in there of that 500,000. So a lot of people signed up just to see what it was and went away. So that's almost half their users are actually people that signed up and never bought anything. Only about 300,000, it's like 350 something, have one collectible. Okay, so daily active transactions. It peaked in February 2022 at about 100,000 transactions a day. Now it's roughly about 2,000 to 6,000 a day now. Depending if there's a drop, it's probably a little higher up at the 6. And then if there's nothing really going on drop-wise, it's down to 2. So not that much. I mean, it's still daily. It's probably the same 2,000 to 5,000 people, 6,000 people just going back and forth, checking it every day. It's not very much. Brand new people signing up. It was at one point 35,000 members a day. Those are brand new people that signed up to the website. Now it's down to roughly around 50 a day, sometimes as low as like 12 people a day. To give you an example, this company has millions. Not mentioning the money that have come in, but in funding, my website, which has no funding and is just me and my brother, we get anywhere from 5 to 20 signups a day. I mean, not as much as them, right? They could get up to like 50 or a couple hundred if there's like a drop, but they get all the way down to like 10 on a day, new signups. That's basically what we get. And we don't have millions and millions and millions of dollars and all this funding and Disney behind us, Marvel, all that kind of stuff. So yeah, I still think VeVe is, from what people I've watched on YouTube and people talking about it and things like that, a lot of people were losing money, and I try to explain, most people were buying this stuff to make money, and so therefore I don't think it would work, and they weren't buying because they just generally liked it. And when you have a drop of 30,000 comics or whatever, digital comics, there's not even like 30,000 active users on it. There's like 2 to 6. So when you drop something, and who knows if those 2 to 6, 1,000 people transactions are actually, for comics. They could be, they have Disney statues, they have all sorts of statues, all kind of stuff. So when they drop a comic of like 30,000, it's probably one person buying them all. Most likely what it is the company themselves drop 30,000, basically buy back most of it, 20, 25,000, and just sell what they have and then buy back the rest and just hold it back, because it literally costs them nothing to make. It's just copy paste, add a new serial number. It doesn't cost them anything. So they basically don't want these comics just floating on, like, the secondary market would never happen if you had 30,000 of a particular issue and only 5,000 were bought by, actual people. And then the other 25,000 just sat there on like the store rack, because the secondary market is like, well, why would I buy yours for say I think it's $6.99. Why would I buy yours for like $200 when I could just buy one for $6.99 that's still there? So what they do is they sell probably like 2 to 5,000, probably even less than that, probably like 1,000 or something like that, 2,000 to like people. There's probably people that buy like multiple copies, like, oh, I'm gonna buy 20 copies, 100 copies or something like that. And then they just take the rest and they put it in a vault somewhere and maybe sprinkle it in. Or maybe they're the ones on the secondary market just asking astronomical prices. That's probably what's happening. And that goes back to my final thing on crypto. I think that 99.999% of the coins out there are just trash scams. I wouldn't even trust any. The only ones I would ever like trust in is like Bitcoin or Ethereum. Now, I'm not saying that they're the future. I really don't know. It's a risky play. But what I can tell you is they've kind of held strong at about Bitcoin at 20,000. Like it dropped down to like 1918. Now it's back up to 21, but it's been trading sideways for a long time at around 20,000 a coin. So at least that shows me that's its resistance. So it shows there's a lot of people that still believe in it. And then there's people that have invested billions in this thing. So I think there's a possibility. Like I just look at it as a pure risky investment play. I mean, every investment comes with risk. Is it the future? I don't know. I really don't know. I mean, I hear all sorts, oh, it is the future because of this, 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 and this. Oh, it's not the future because of this, this, and this. No one really knows for sure. That's the honest truth. There's justifications for everything. This is the reason why. No, this is the reason why. You don't really know. So to me, I'm not going to sit here and tell you that I have all the answers for crypto. I don't. To me, I look at it as an investment opportunity. It's done well for me because I invested it when it was $4,000 a coin eons ago, before it ever had its first run up back in 2018, 17, 19, I forget. Long ago. I invested then and I've bought randomly throughout. I haven't bought crypto. I think the highest I paid, I bought like $500 worth when it was like maybe like 30,000. But that was like the last time I invested. So I'm still up overall. So I'm not worried about it. I just look at a long-term risky play and we'll see what happens kind of thing. I don't have that much invested into it. But the same thing, I invested a ton in Tesla. That's a risky play. Elon could die. Elon could go crazy. You never know what's going to happen. But everything you invest in if you're investing, it's a risky play. That's it for my Financial Fridays. Have a great weekend.